Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the 26th day of August, it is Thursday, and this is the daily report. Gold is currently trading off a couple of dollars, trading at 1237.47, and that's basis the Forex. And over in the COMEX, it is currently trading at 1239.60. Traders, over the last 3 or 4 days, as new information came in, I've been highly evaluating the way I've been doing the wave count. I work with a couple of other Elliott wave technicians. There's very, very few of us in the world that can correctly do these wave counts, and we are not always right. When new information becomes available to us, we must take that into our analysis and make corrections if need be. And let me show you why I am giving you this explanation. As the market came up, we hit our high obviously at 1265, and at 1265 we correctly knew that we were going to go into a corrective phase. However, when this corrective phase came down, it did come down 50%, and myself, along with other Elliott wave technicians, were calling this entire move here the A wave down, and therefore we were labeling this the B wave. However, the compelling information that came in was not only the fact that it went to 50%, farther than we would expect, but once we crossed to this above this 76% retracement area, we believed we had to rethink the way that we handled this wave count. Therefore, we are revising this wave count as follows. Up till 5 were the same. This is still, we were absolutely correct about the correction. However, within the correction, because the market is so bullish, what we saw was a very short-lived correction. This A, B, and C took us 50% in terms of a retracement from the beginning of our first wave here to the top of the fifth wave here, and our halfway mark, or 50%, is exactly here. That is inadequate, and it also is a full-blown correction. Therefore, right now, the proper wave count is that we are currently back in a bullish cycle. Now, one must realize that this information, this new evidence as to our revised wave count, really came 2 days ago when we breached this 76 retracement level. As we've talked about, a classic B wave should be between 50 and 75% retracement of A. It should not go to 76 or above that point. And once we saw that that happened, we realized that that, coupled with the fact that this move from 5 down to the 1155 area right in here was a 50% retracement of the beginning of A to the end of the fifth wave, we realized that there is absolutely no doubt, but the entire correction in this bullish cycle that we just witnessed is right in here. And how does that actually change the way that we're looking at the market? Well, with this revised wave count, we are going to expect the market to correct here. However, the correction is going to be much less significant than we had originally thought. So that in terms of a straight wave count, let's say that this does become the top, I would look for anywhere between a 38 and 50% correction of just this wave 1. It's really important that we got the last piece of this puzzle. The fact that the market went and did trade above this 76% level caused us to reevaluate the way that the wave count was done right in this last area, and realize, traders, that this is a science, it is also an art, and that as new information becomes available to us, we have to be able to be flexible enough and honest enough with our analysis to be able to take in new information and restructure the way we're looking at the market. I believe we're absolutely on track, and because of that, what I'm looking at right now is, as this wave 1 has gone to the top, assuming that it stalls in this area, I would expect a retracement on the minimum of 1210, that would be 38%, and 61% would be the low end. Typically, you're going to see it go either to 1210, 1200, or 1190 on this retracement right here. Assuming that this is the top, I would look for only a move to this one area and then to continue on its bullish phase. So traders, how does this change the overall picture? Well, it actually really doesn't. When we consider the fact that we were correct in calling the top here at 1265, we absolutely were correct in calling this bottom. The adaptation that we made, meaning that we looked at this as the entire corrective phase here rather than just a wave of the phase, has one significant change, and that is, as you recall, we use this wave 1 as our benchmark for 3 and 5 on our impulse side. So once this wave actually comes to an end, it's going to allow us to do some concrete projections as we did in this area for waves 3 and 5. Also, it allows us to bring in our Fibonacci retracement for the waves 2 and 4. With wave 1 defined, I'm absolutely excited because we can start doing some forward calculations and forward projections if we are in fact as in this new impulse phase, as I absolutely believe that we are. Here's a possible scenario and a following projection that I think is a beautiful thing to behold. And here's what I'm looking at. What we're doing is we're taking our benchmark wave 1, we're timesing it by 1.61, the Fibonacci sequence number that we do. This is a scalable line, so it will adjust to this chart. If we have a true retracement of wave 1 that's 50%, wave 3 could carry us to 1320. If in fact we get a retracement of 61%, we're still looking at 1315 as a target on the upside for this third wave. This would put us above $1,300 before the end of the year. And traders, as a fundamental bull, I'm truly excited about that. Please, I want you to understand that what I do for a living, my vocation here, is absolutely a passion more than it is a vocation. And my subscriber base, in terms of my work, is my single highest responsibility. Once I saw that this new data, meaning the market moving this strongly to above that 76% after coming off of a 50% retracement level, with that new information a day, 2 days ago, I had to go ahead and readdress the wave count that we had because of this current activity did not fit. And so there had to be some back adjusting, or most importantly, a reevaluation of the new information. I am confident with this new information that we now are back in the bullish phase. We have weathered the correction. The correction was much less than we had thought, and most importantly, we're able to look at some upside projections, and those upside projections to me are very exciting. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading, and we'll talk to you tomorrow for the weekend review. Bye-bye.